I'll start with you on global stocks. How are you feeling? It's not like the Fed said that it wasn't going to be raising interest rates. That's been a headwind. It's not like we have any resolution here when it comes to Ukraine. Should you buy stocks?
Well, my thinking is that definitely we're going to see higher and higher rates. And I expect to see rates in America go up to 6 or 7%. But that doesn't mean the stock market has to go down. As you know, if you look at the history of interest rates and the stock market, there's not much correlation. And anybody who wants to protect themselves against this inflation must hold stocks. They must hold companies that are able to adjust their prices to inflation. And it's interesting that if you look at the global picture, very mixed picture, you see countries in Latin America up or at least sideways movement. And even in Asia, it's the same thing. So despite the fact that China has gone down dramatically, other markets around the world are not doing too badly.
6 or 7% is a very aggressive target for interest rate hikes from Mark Mobius, Mike. But what are you gathering from the commentary post-Fed about whether stocks can continue to rise? Because it's interesting that there is follow-through today. It didn't look tentative this morning, but follow-through on top of a rally, even though the Fed said, hey, every meeting is live. We're going to keep going. We think the job market is tight and our inflation is our number one fight.
Yeah, very weak dip this morning. Obviously, the people felt they were not positioned if this market was going to recover. So what I take away from that is, yes, the market has spent the last 5 months clenching up in fear of a start of a tightening cycle and pricing that into bonds. And yesterday's message from Powell, even though the effort was to seem very, very firm and resolute against inflation, was not incrementally hawkish enough relative to what the market already maybe understood. And the market's oversold. And all that litany that you mentioned, we tested the market for $130 oil. We tested it for a land war in Europe, at least in the short term. And, of course, the start of the Fed tightening cycle. And it didn't quite buckle. That's all we can say. Look, it's a 5% or so rally in 3 days. That's great. It definitely goes some distance toward proving that the bulls are still in the game. But we're right at those levels where something like this would peter out if it was just a reflex technical bounce.
Mark, China, have to talk about. We started the week getting nervous about the lockdowns in China and the economic spillover effect. You have liked this market for a while, and I'm sure your portfolio holdings are down, certainly for the year. But they've come in and said they're going to support the market. So is that ultimately why you stay there? Because the authorities can just do that? They can just swoop in and save the day?
Yeah, basically the Chinese government can say, we like the market, we want it to go up, and it'll go up. Because investors in China listen to what the government is going to do and act accordingly. We don't have very much in China. We have much more in India and Taiwan. That doesn't mean that we're not looking, because there may be some opportunities. But there are a lot of things that are hitting China that make it very, very iffy. This situation with Russia, for example, puts a lot of people on edge. Delisting of ADRs and a number of other issues with the U.S. Makes China somewhat risky at this stage of the game. However, there are going to be opportunities going forward.
EEM, emerging markets, Mark, are not participating in today's rally, and they've been lagging. Does the war in Ukraine or the Fed hiking cycle change the thesis on emerging markets and how they could do this year?
There's no question it changes the thesis for some of the markets, very dependent upon oil. They're going to be dealing with very high oil prices going forward. And then you see what's happening in China. But as I said, many of these markets are doing quite well. South Africa is up. Brazil is up. A lot of the markets are moving sideways. They're not showing a lot of problems as a result of the Russia situation. So there's going to be lots of opportunities in these markets around the world.